Welcome back to Next Gen Investing. I'm Jenny Horn, joined by Renita Young, here to talk Weight Watchers, or I guess now it's WW International to put it more correctly. But Renita, up over 50% on the session, and I have to make this joke, a pretty nice gainer on the day.
Yeah.
These funds are too easy.
Too easy. I don't know. We might have to shave off a little bit for later, but we'll see.
See, we've been planning this, but here to tell us more now on why we're seeing such a move higher today, I'd like to welcome in George Tellis, Senior Markets Correspondent for the network. So George, I hope you have some good Weight Watchers puns ready, because we are all firing on all cylinders here. But walk us through the news and why we're seeing such an exuberant move to the upside.
Well, you both beat me in the puns. I didn't come prepared with that, but I will say this. I mean, we talked, I think, about this particular company, Weight Watchers International, I believe in early March when they reported earnings, and this is the second time this year they've had such a huge move. And today, a little bit different in terms of the move, but there's actually some positive catalysts for the company. We talked about the earnings in March, where they actually declared the losses on an adjusted basis were a lot worse than expected. They lost about 46 cents a share. And that's actually quite a bit, just considering even the stock price, let's call it around $6 a share. It gives you an idea that they have a negative earnings yield. And sales were down 19% for the quarter on a year-over-year basis. But if you look at the subscriber base, one of the challenges the company was facing in 2022 versus 2021 is that in Q4, the total subscribers contracted by 14%. For the full year, it was down 30%. Now, that, again, is primarily for weight management services, nutritional and weight consulting services. And we also know that, of course, Weight Watchers International has food and beverage licensing as well. But I think the game changer is, and we talked about this, is the acquisition of Sequence, which effectively brings in the digital monitoring as well as, of course, the aspects of pharmaceutical sales for weight loss. And I think that telehealth-based services are also an additional catalyst for the business on a forward basis. But we are seeing a stock that, if you look at it from the standpoint of 2021 versus 2022, it seems to be that people seem to be more focused on their pocketbook than their waistline. And I think that's maybe why we've actually seen, or the company has seen, quite a contraction of subscriber base. Now, one of the other things we talked about is if you compare the company, and this is even pre-pandemic, in terms of total sales, the total sales for 2022 are around $1.1 billion versus about $1.5 billion in 2018 for the full year. And what that has really done is it's created a situation where the company was net income profitable in 2018 of about $225 million to a net loss of $250 million. But the stock is down quite a bit. So based on what the analysts like Goldman Sachs say, they've actually got a $13 price target. They actually see the acquisition of Sequence as effectively a business pivot for the company, which has actually shown some subscriber contraction. But for those who are actually still subscribing, they may end up paying a little bit more for telehealth services. And that, again, speaks to better operating leverage on a per subscriber basis. And I think this is one of the reasons why Goldman Sachs upgraded the stock on a quite aggressive basis. The estimates they had prior to this were close to $4, and now they're at $13.
George, when you look at this stock, it's been through so many different remakes over the years, WW International,
Yes.
Weight Watchers, right? It was arguably one of the first to do what it does, really, but now there's so much competition with more boutique firms offering the same service, nutritional services, weight loss services. So what kind of, or just how much more important is it for a company like this to be able to add other services on? And are there any chatters of any more services that Weight Watchers will be adding?
I mean, that's a good question and good points to bring up. I mean, if you just think about things like Instagram and influencers and effectively digital marketing and e-commerce sales, all of those different factors have challenged or created a challenge for Weight Watchers International over the past 5 or 6 years. So I think to answer your question, the way the company should pivot or is pivoting is the right direction. What they're doing is they're bolting on additional services to actually counter some of the subscriber contraction that they've actually faced, especially in the last year. So again, if you could actually get the existing subscribers to pay a little bit more for additional services without additional costs or very low additional costs, then that's going to be very accretive to the company's bottom line. So even if sales don't necessarily reach those 2018 levels again, the profitability profile can improve significantly. And I think this is what Goldman Sachs actually sees. Now, there is one caveat I will say that that because the stock is highly shorted, you are getting effectively kind of a short squeeze going on here. So that's something to keep in mind, because the market cap of the company right now, or based on yesterday's close, was around 270 million. So it's easy to be pushed around. But the company does have quite a bit of debt. It has about $1.4 billion in debt. So one of the things I do think that can happen, I'm not suggesting it will, is that they may issue a secondary offering. And that may not necessarily be a bad thing in the long run, but it would actually help the balance sheet in the short run. So that's something to keep in mind. But the company is actually very conservative in their offerings as well. If you look at the share count in the last 5 years, it's actually been very steady at around 70 million shares.
Yeah, George, this is seeing like meme stock level shorts, so it's really important to point out why we're seeing, I'm sure, this move so much to the upside today. We'll leave it there. Appreciate it, as always. George Till, Senior Markets Correspondent for the network.